Hello guys and girls, and welcome to AFT, Advanced Falcon Trader, where you are mastering the basics. When you know the basics to a high degree, you can perform to the highest level. Now, I'm super excited to get into these lessons. Any questions that you have, make sure you note them down. They're likely going to be answered throughout each lesson. So if you have questions at the end of lesson 1, watch through all the content beforehand. Don't jump into it too quickly and just blurt out all these ideas and these follow-up questions. Watch through the content first, and I'm confident that everything will be answered for you. Now, the great thing about this is there's still going to be scenarios that are going to occur, which leads me to the ongoing support. There are so many resources that are going to come out in the AFT section. We're super excited for the long-term growth of this. As you guys and girls know, I've been testing this on 6 figures for over a year and a half, longer now. And what I'm incredibly confident about is that anyone who has solid foundations, they've listened well, they've applied themselves, you can scale up beyond belief. So if you master this and you really pay attention to all the small details, I want you to watch through this content with no distractions. You owe it to yourself. You need to make that non-negotiable. Watch it without any distractions. And the same way when we introduced the 15-minute chart, we don't want you just going and down searching for these lower time frame trades. Now we're introducing the 5-minute in the refinement in the right areas. I'm going to go through the whole criteria. There's going to be resources attached to you as well, so you'll be able to take those and have something ongoing so you can get really good at implementing this. But what I don't want is this. I don't want you searching for trades on the 5-minute straight away and almost in hunt mode. Think about a hunter, right? They go out, they want to hunt because they need to survive. So they're literally going out to hunt for that day to be able to eat, otherwise they won't survive. Now, what happens at the end of the day if they've not had a successful hunt? They either go back tomorrow the next day, or they settle for something a little bit less because they know, right, I need to eat, I need to survive, I'm hungry, I need to feed my family. So they just kind of settle for anything, and that's a little bit like trading. They have high criteria, they know what they need to do, they know what they need to focus on, but because they're in this searching mode, in this hunt mode, they know the high criteria, and then as the day goes on or the weeks go on, they start to lower their quality because they think, well, I just need a position, I need to be involved in the market, and they can't control their emotions because they think, well, if I get involved, it will move me closer towards it. The same way with this refinement, this is not the holy grail. This is going to be the addition to somebody who already knows their stuff. And once you know your stuff, this is phenomenal. Mark my words. With the growth we've already seen from people that have started using it in the live sessions is genuinely mind-blowing. So I'm really excited to get into this. There's a lot in store here, so bear with me and make sure that you pay attention. You're not distracted as well. Remove any distractions. Make that non-negotiable when you're watching this content. So without further ado, let's start off with lesson number 1. Right guys, so here we have CAD Swiss. So we're going to start for the higher time frame and work our way through to get towards the refinement, and you're going to see how everything links. So a few ground rules. You're probably wondering with stop loss. So with the refinement, the new ground rules is this: 10 pip stop loss. You can go lower than 15 now in the right moments, in the right areas. Now I'm going to have some resources and homework for you to do at the end of lesson 3, which we'll get to. However, so you know the ground rules, you can go lower in terms of stop loss. So we can go down to 10 when relevant. But what I would say is this: when you're going to deal with any exotics, don't just go to a lower stop loss for the sake of it. It has to be relevant. So if something tends to spike a bit more, has higher spreads, you use your initiative in terms of the structure. So an important part there. So what we're going to start off before we get into the example, so you understand, is what we want to focus on first. So what I want you to do is this: to get really great at this, we have continuations and reversals. I don't want you focusing on reversals. I only want you to focus on continuation. So what we're targeting first and foremost is refining 15-minute flags at high end of the structure. So at the top of the structure, you're going to have impulse, you're going to have corrections, and you're going to see these tight flags that form. There are additional entries on the 5-minute, which we'll get to in lesson number 3. However, in this lesson, I want to really focus on refining these 15-minute flags. So you can refine them on the 5-minute. Now, it's going to help you with taking entries on reduced risk, and it's going to help you with getting risk entries within a 15-minute flag that you wouldn't have seen. And some scenarios, you're going to have a move that pushes down, and you're going to see something that looks a bit messy. You can't really see it on the 15 that clearly, and it looks almost a bit choppy to you. You'll be able to use the 5-minute as a refinement to filter that flag to essentially give you the confirmation to actually take the trade in the first place. What we're not going to be using is this. I don't want to see people using reversals and then entering the 5 minute. Now you might be saying, well listen, we've got a 1, 2, 3, why can't I use the refinement there? It's valid and you can take it. However, you run the risk of just increasing risk. You're increasing the chances of being tagged in, tagged out, and taking these tiny little retraces on the 5 minute that are not confirmed yet, even though the structure is there. Now that's not going to do well for your confidence. I'm not even touching reversals at this stage because it's just not necessary. What I have tested and what I have seen on continuation alone is more than enough, guys and girls. So forget about reversals at this stage. You don't need it. Continuation, think about it. Continuation pattern is already within the run. It's already within the move. That's all you really need to know. Let's follow a simple guideline. If we've got an impulse and a correction, let's say we've got a 4-hour structure. If we've got a 4-hour structure, how do we unlock this entry criteria? Well, 4-hour structure, you're looking for a 1-hour entry. If we then have a 1-hour structure, then you refine that and use the 15 minute. Now we've got a 15 minute flag. You can then refine that 15 minute and use the 5 minute. So I want you to think about it in that order as to how you use it and why using the 5 minute on a 4-hour structure could be valid and could be relevant, but you run the risk of getting in a bit too early without the rejection. The same goes for the 1-hour structure. Now, there are going to be scenarios that I show you in which that you can use the 1-hour structure and you can filter on the 5 minute, but you just don't need it at that stage. We have gone through the content, we've gone through all of the testing, and what I've realized is that this is what is going to get you the best results in the most sustainable way. The ongoing content, the ongoing support that's going to be in the AFT section, you can have an abundance of resources and extra lessons that go into this. However, to start off now, what is going to help you with the consistency is literally filtering these 15-minute flags. Using the 5 minute alone is going to help you, let alone when we get to the additional entries. So I want to make that clear. Do not touch the larger 1-hour structures. You just don't need them at this stage. All you're going to focus on is this. I'm going to break it all down so you can see everything. So that unlocks everything here. Think about it like this as to why you wouldn't touch, let's say, a larger 1-hour structure just yet. Imagine we've got a double top, right? So we'll just put ray line in here. Price comes down, comes up a little bit, and it kind of comes to a value area that we know. It comes to that value area, we push down, and then we have a 15-minute flag high up in the structure. High up in the run is where you want to be taking them. Trades at the top and the bottom of structure are going to be the most valuable areas for you to use this refinement. Now think about it like this. If we've got a double top and we take this trade, it's a high chance early up in the run that this plays out. So let's say you refined it with a risk entry or you've taken it with a reduced risk entry. You know that is a very great area to take that trade. Let's say we've had a few more flags, we've sold off and we start to expect the larger flags. Now you've got a 1, 2, 3. If you're taking a trade here, and let's say this is a 4-hour structure, it's a larger structure. What unlocks this to take this entry? 4-hour structure, 1-hour entry. If you start going too low of time frame, it hasn't had a rejection yet, so you get in early. Can you imagine how many tiny little 5-minute candles that are in there that you take to be tagged in, tagged out, and it just trickles on a little bit, and before you know it, it comes back up, creates this M-style pattern to then sell off. However, look at the difference. You increase the risk of taking a loss using the 5 minute as a refinement in a structure like this from a lack of understanding versus refining a 15-minute in continuation at the top. So although this is a continuation pattern, you need to stay away from the larger structures just yet because you won't know how to interpret them, and that's where it will lead to more losses. I do this for your own benefit because you're going to make more money and make more profit and build more confidence just by doing this thing alone, let alone once you've built the confidence you can add those layers in. So I wanted to set those ground rules for you first, and then we can move on to the next stages, which is super, super exciting. So just understand, be patient with it. You don't need to rush anything, because once you train your eyes to be able to see these on a clearer basis, you will be able to take advantage of the bigger structures. Now remember one thing, what we've done with this is that we have not compromised our risk. In certain scenarios, we've actually made it better, which is phenomenal. When you think about, when you increase returns, and this has the ability for you to scale up to 6 and 7 figures and be making 20k, 30k, 50, 100k per month, it is very difficult to increase a return without normally sabotaging your risk. We've done the opposite. We've been able to keep the risk the same, if not less, which is just still mind-blowing to this stage. However, now let's get to the example. So you understand the boundaries and the rules that have been set, and they've been set for your own benefit so you can get the most out of it. If you was to look at this on a daily structure, this whole price action could look a little bit messy. And I bring it back to mastering the basics. Let's break this down, and we're going to go all the way to the entries of the refinement. So we have our daily, higher time frame, same thing. We've broken above this area in this structure, and an untrained eye would just see this as a bit messy. Now what's actually happened here? We've broken above, we're in a value area, and now we're looking for sells. So if we go to the 4-hour structure and we break everything down from a mastering the basics point of view, what do we actually have? Well, let's build this. We've got 1, 2, 3. So we have our ascending channel. Then we've got our clear middle section in the move. Right, so we've got our 4-hour middle section here. Bigger structure, impulse, correction, continuation. Basic stuff that you know. We push through the high and we're looking for ejections in this area. Now remember, high in the run, when there is structure present like this, is going to be phenomenal. Now the important part is, it has to be in a state of continuation first. So you don't want to be trying to time your entry right at the top in the state of the reversal. You want the first push to happen. There is a difference between taking something like price has moved up, come back up to test a mini double top, and you've got literally a reversal channel here, and then you're trying to take a 5-minute on the third touch and you're trying to time it perfectly. You don't need to be doing that. Stay away from those reversals. Wait for the first push of continuation to start flowing before you get involved in those trades. So if we work our way down, we go to the 1-hour chart. Now suddenly there's context behind this overall position. You can see there's a bigger structure there, and we're looking for the continuation. We're looking for the first push down to start getting involved in this move. Now this part here is what we call the golden run. This is essentially the momentous run. This is where the banks are stacking their orders. Think about it from an institutional point of view. How did I come about this particular entry right at the top? Now, the one at the top where we've already started with momentum and we're looking at the continuation essentially is when the real players are stepping into the market, you've got to understand they're making up this momentum. So who is causing this move to play out from here to here? Institutions, funds, etc. So what do they start doing at the top? What's the why behind it? They're stacking their orders. They're not just putting one big lump in. So then what happens right at the top of the structure? It starts to push. It starts to form these tiny continuations. And essentially it doesn't really form a 15-minute flag, because all it's doing is just stacking. It just trickles. You'll probably see maybe 4 to 5-minute candles, and then boom, drop. And then you're looking for the next thing. You're essentially waiting for that first 15-minute flag. And you know, sometimes when you see a 15-minute flag that only has 4 15-minute candles, and then that drops as well, where you was waiting for it to form, that's what's happened. That's what's happening in that moment. So that's the momentous run. That is the golden run that we want to be involved with. Now you can see overall target, we hit 90% rule clearly, and this is a recent structure. This is not, that far away. So let's take a look and go lower. So now we've got higher time frame context, and we're looking for an actual move to start its continuation. What do we actually have at the top of the structure here? So let's get this exact. We start a bit of a squeeze right at the top. So we've got this channel. You do not want to be trying to time entries within here. You want to wait for the first push, because we're looking for continuation. So now we can work our way down. That gives us permission to do so. We're then looking at the 5-minute. So now let's take a look at the 5-minute for the refinement. This is so good. So we work our way down now. So on the 15-minute, you couldn't see this, right? You don't want to be timing it up here. You want to be waiting for the break. So what's happened? We've broken this phase line, this structure, this ascending channel, and then we have our first 5-minute flag high up in the run, in this golden run that you want to be involved with. So what you're going to see is consolidation. Now I wanted to show this one because CAD Swiss is not your cleanest pair, right? So there's going to be cleaner ones, there's going to be slightly messier ones, but the context behind all of it, it's that first push. We have that first push out, we have the confirmation, we have the orders stacked there, so you can see the 5-minute just consolidating. And now if we go to the 15-minute chart and go back, so you can see, look on the 15-minute, we have how many candles? We've got 1, 2, 3. So pretty much 3 at the point that you would have seen it. So you would have seen that break and think, right, we're starting the run of momentum. It's high up in the run, yes, but we may be starting that continuation. So high up here, this is where you want to be taking the trade. However, it's just not formed yet on the 15 minutes. So you would have been waiting, and then what happens? It pushes to the downside. You've missed a position, or you don't even see a position that was there. And that was the same for me when I started testing to be able to get involved in this. So now it's pushed down, and then it starts to form its next flag. But let's go back to the 5 minute first for the refinement. So essentially, all you've done is refine what we're already looking for and looking at. So if we now go to the entry and we mark them on, we've got quite a few. So we have entry number 1, and now we have entry number 2. So this is where you have your 15-minute flag. This is where I want you doing the most work. The 5 minute actual separate continuations, because that's a question that's going to be asked. Can you trade the 5 minute independently? Yes, in the right area, which is I've just showed you in the right area. And in lesson 3, I'm going to show you exact examples of where and when to use it. This is actually one of them, but this is going to build the whole picture, which is why I'm showing you now. So all I want you to focus on is refining the 15-minute flags, and you're going to be able to add these additional entries at the right time. No larger 1 hour structures, you do not need it just yet. So now what this does for you is that it gives you the opportunity to see things like this. Trades that you would have taken for, let's say, a break even may become 1 or 2% profit. Trades that you would have taken for a loss might then become break even, and trades that you take for a win with the refinement will literally, like, generally double your returns, if not more. For what we've seen in the live sessions already, the discrepancies have been ridiculous, and I can't wait for you to all go through the testing after you've consumed all of these lessons and you see for yourself in your own trades that you've taken, let alone the ones you're going to be taking in the future. But now to the next part. So as you can see, this is your typical 15-minute flag. Let's go to the 15-minute because you can see this clearer. So this is something you could identify. We're looking for continuation, right? So that was the first continuation. This is the second continuation. What do we need to be aware of when using a refinement? The same thing that you're usually aware of, trading into a low, right? So if we're looking at something like that, what would be more appropriate at this stage? Taking a reduced risk entry or taking a risk entry? Risk entry, right? Because you don't want to be trading into this low. So how can you take the risk entry? Well, you can't, because there's not one present now on the 15. But remember, it's high up in the run. It's where you use it the most. That is where you ask the question, can I manage the trade if I was to take a risk entry within the flag? This is where the refinement comes into play. You refine the 15-minute flag as to what you're already looking for. So if we just go into here and then we go 5 minute, what the 5 minute is going to do for you sometimes is things that are not very clear on the 15. They're going to essentially confirm the 15-minute flag. Sometimes it's not going to be you've gone to the 5 minute and now you have to take a risk entry. Sometimes it's going to be a 15-minute flag that just wasn't that clear. And when you go to the 5 minute, you can see, oh, right, we actually have the sections. There is structure to it. It does make sense. So as this trade moves to the upside, right, risk entry, we've got a rejection. We're looking at the top. Let's say you've got involved in, again, here, 10 would be fine. So you know those scenarios where you've probably got involved in a risk entry on just a random trade, and you've taken, say, a 15 pip stop, but you'll look at the 15 pip stop in terms of the structure. Is that a relevant stop placement? Does that protect you anymore? Not so much, right? You're looking at the structure, so 15 is not relevant. That's where that's going to come into play with 10. But I wouldn't go lower than 10, even though, you know, you could say 10's a little bit wider here. You might be in a little bit lower. 10 makes sense at this stage. So, as you can see, risk entry, we've got the rejection, everything is there, and then we start to play out. Now, at this point, you're running roughly into that low 1.5. If you was to take that reduced risk entry and it returned, you wouldn't be able to manage it. You end up taking a loss. In this scenario, if that pulled back to here, you was running 1.5. It's left the structure, pulled back in. You have enough room to be able to either stay in the trade just about if it doesn't tag you out, or just take a healthy break even. So what is the value attached to that from a psychological point of view of trades you've taken of the loss and now become break even? That changes your mindset from a mental perspective, doesn't it? So it's huge. So then what happens next? Right, we start to play out, push down. You would have again walked away with roughly, if we go to the 1 hour chart here, so this leads me to the next thing. You might be thinking, well, how do I manage the trade? I'll get into that more in the other sections. However, you will still be using the 1 hour for management at this stage. Now, sometimes price is literally, you're going to get involved and it is just going to sell off with one big massive candle. The rule of thumb is, if you see something like that and there's nowhere structurally to manage it, move it down 50%. So something to write down right now, move it down 50%. Because what you don't want to be doing is seeing, because it's going to be normal for you to be involved in trades and they will generally be running at 7% in a day, 8% in a day. And you want to lock in that profit because you're not going to get used to that, especially as you start scaling up with bigger capital, seeing that run. So just lock in 50% if there is nowhere else to lock in. Alternatively, if it's just running with normal structure and you've just timed your entry more precise, manage the same way that you always do. Don't do anything different. You don't need to go to the 15-minute at this stage. We can work on those at a later stage. As of right now, stick to your management. You cannot manage things correctly if you're not getting your execution done properly first. So you want to build one at a time. Get good at this part first, still manage on the 1 hour, and there will be certain scenarios in which that we may be able to manage differently on counter trend positions, for example. But as of right now, don't play with your management. Stick to that 50% rule if something is running aggressively and you've got nowhere to manage it. And then on the other side, manage it normal. Just stick to your normal plan. So as we pull up here, you would have got taken out roughly about 2.8. So what would have ended up probably a break even becomes a 2.8. And this is a trade that didn't work out, by the way. That's the difference. Think about how many of those that add up over the month. That, okay, imagine you took 3 of those trades and each one banked you on average 2.5%. It's an extra 7.5%. And these are trades that didn't work out. So that is the power of this refinement once you know what you're doing. Now let's go back to the overall bigger structure so we can see. This is where I want to show you something, but I don't want you to use it just yet. So look at the context. It was originally quite a messy structure, but to the untrained eye, they don't know what they're looking for. And this is why when you master the basics and you see the most simple things in the correct manner, you will take full advantage of this. What else do we see here? Left shoulder, head, right shoulder. Now this is the interesting part. Look how price comes back up to that area, it taps into that last correction, and then we go. Now let's look at this from an entry criteria. Where could we potentially use this larger 1 hour structure, if you like? It could almost be a borderline 4 hour structure. How could we utilize that with the refinement? I'll show you exactly how. So we've got our first entry, if you like. We'll firstly go to the 4 hours so you can see what I mean. So on the 4 hour chart, we have our push down, confirmed the momentum to the downside. Now we can see this pull up. We're pulling up towards this area. No real rejection here on the 4 hour, but you can see the structure. The 1 hour paints a clue. So on the 1 hour chart, we can get involved in this position after the rejection, because technically we've got a rejection off of this area, which if we went to the 15-minute you would see, and then we've got this squeeze happening here. So someone might mistake this for, it's a little bit steep. You could see it as a bit steep, but steep in comparison to what? It's an ascending channel that essentially is ascending. That's it. So we're ascending to the upside, but we're in the state of continuation. So remember that. We're at the right shoulder, which is protruded higher than the left. We've got the higher time frame within our favor. We've tapped into that previous correction. So if you just looked at that firstly and said, oh, it's a bit too steep, and you wrote it off, you would lack context of the whole position. So now we can see first entry would be after that 1 hour rejection. You could put your entry here just above, call it a 20 pip stop. That would be entry number 1, and you would end up getting out roughly with, again, this is why management, you'd end up getting out roughly a 90% rule quite easily before it pulled back, roughly about 11 to 1. So it's still a decent trade. You know, don't disregard what you already know. Now we can take a look at the second entry, which would be, this would one I wouldn't be in favor of. However, we have that kind of evening star pattern. It would be taking it on the break of something like that. From a mathematical point of view, it's still technically there. Call it a 35 pip stop. You still would have walked away with roughly about a 6 to 1. I wouldn't really opt in for that entry. However, if we're looking at a structure within there, we can refine that further. We go to the 15-minute. And let's see if we can refine even more. Right, so in this scenario, we've got the 15-minute rejection there. Now let's go to the 5. So I don't want you just jumping to the 5 for the sake of it. We go to the 5-minute. We just zoom in. So this is how you can see with the 5-minute and the 15, pretty much a similar kind of area, but we get that evening star formation there. So this is what you can get to once you know what you're doing. So look at the context behind the trade. We get that previous correction there that you could have got involved in a risk entry or a reduced risk, right? So we have entry 1, entry 2, entry 3. Now we're looking for entry 4. Look at the structure, scooped back up, tapped into that area and rejects. It's no coincidence. Then we zoom in and you can see the evening star formation. It actually gives a little consolidation just underneath that. But after this candle, so you can technically see, we get a little doji after that. We push to the downside, and then you're going in for either just above here, right, which on something like this, 13 would be okay. You can technically stop crop something like this, but being so close, call it a 12 pip. It would be more than enough, right? You don't have to go to 10 every single time. So now we go back to the 1 hour, we look at the structure. All you've done is time this precisely, but you've been able to use your stop loss to your advantage in the right way. To the low of the structure, we're talking 4.7 and something that has barely even moved yet. And now let's take a look at the actual run itself, getting out at the same sort of area. What have we got? So 19.5, lovely. So just from that perspective alone, look at the difference. We're talking double the return, taking the exact same trade with the same context. So you could look at that trade with the 1 hour and say, well, that's a great entry, because it is. Left shoulder, head, right shoulder, momentous run. You're in the golden run. It's pulled back nicely, and you're taking this next continuation to the downside with your target at the 90% rule. It's very, very clear. However, you could have got out for an 11%. So look at the difference. How much value is that worth to be doubling your return on the same trade that you're taking just by being more precise? So that is the difference. Now, I don't want you using these ones just yet. This is your more advanced layer. All you need to literally focus on is high up in the run and taking advantage of either the 5-minute independent flags in the right area, which I'll show you more examples in lesson 3. And in lesson 2, we're going to be diving deeper into refining more 15-minute flags. But I can promise you this, just by refining these 15-minute flags, getting involved in both of these, let's actually look at the allocation of percentage at this stage. So first one, we go 5-minute for it so you can see it clearer. Because the 1 hour structure, as you can see, it's a ridiculous return. However, you don't need to, something for you to move towards at a later stage, which is exciting. But let's say, for example, you went with 12, which is fine there, and you would have ended up getting out of the position roughly, let's go to the 1 hour. Roughly, you would have got out of that position for, yeah, most likely about 3. So nothing crazy there. We go to the next position. This would have been the risk entry within the move. About here. We can see where we're at on the 15 as well. I'm just going to get the stop placement. So within here, we're talking, again, 10 would be fine in this scenario as a risk entry. You would have got out a similar sort of place. It would have had maybe 2, call it 2.5, right? So you've added, say, 3 and 2.5. 5.5%, and it's not even played out. Literally not even played out. So imagine 5.5%, let's actually count the hours from 1, 2, 3, 4, 5, 6, 7, maybe 8. Call it 9, right, by the time you've taken out. So without under 10 hours on a trade that didn't work out, you've banked 5.5, maybe more. And if you're skilled enough and you've got a bit more experience and you bank that, well, then you can see how long did this one take on the daily. Right, so on the daily, yeah, not long at all. So as you can see, right, so you're involved roughly here. So 1, 2, 3, 4 days. So 4 days and pretty much 20 to 1 without all the other positions as well. So it just goes to show you, when you understand the structure and you understand the price action, an untrained eye doesn't really know how to look at it. But this is what I'm talking about, mastering the basics. What I have seen, guys and girls, people underestimate the simple things of head and shoulder pattern, double top, you know, ray line. People underestimate and undervalue the most simple things that have been around for 30, 40 plus years. When has a double bottom never been a double bottom? When did a double top stop getting a double top? When did a downtrend stop being a downtrend? When did a pullback stop being a pullback? What's happened is your mind has been infected by these complexities that don't really actually serve you. It's the simplicity that wins. It's the simplistic part of understanding where you are within the structure, mastering the basic things that originally, if I showed you that raw naked price action, it was literally mess. But yet we've broken it down and we've built it and we've understood in which areas that we need to focus on. So this is your golden run. Right, this is the golden run. This is where the money is. To understand where we want to be getting involved. This is where the orders are getting stacked, and we essentially want to ride the wave of the banks, the funds, the institutions. And then what I've figured out is that those tiny independent 5-minute flags high up in the run, and then filtering the 15-minute flags using the 5-minute refinement, are so powerful. So I wanted to show you more of a messier pair that doesn't always move that cleanly, and a trade that actually didn't fully work out, yet by understanding this, in just a few hours you still made 5.5%. You make that in a day, you're not going to be unhappy. And then if you're involved in this, once you're more skilled and you can start to look at the bigger structures, well, then you can see the momentum that they go for. It is insane. But sometimes even these tighter ones, they really do go. See price action like this, to summarize. It is like a language, everyone. It is literally like a language. Now imagine you can't speak the language effectively. Well, you're not going to be confident, are you? But once you do speak the language, you want to become fluent in price action. Put it that way. And when you can build these things, follow the rules in a simple way, you can hit phenomenal returns in a safe way that has not compromised risk. So that will be the difference. So what's going to happen is trades that you would normally take on break even become wins. Trades that you would normally take on losses can sometimes become break evens. So you're psychologically protected. And just by refining your trades and refining your stop loss, just by you literally getting involved in a trade that you might have already taken with a 12 pip or a 10 pip stop, because I kind of tested all of this, by the way. I've stress tested and battle tested all different stop sizes. You don't need to go lower than 10. Stay away from anywhere near lower than 10 on exotics as well, because you're just asking for trouble with spread, and just keep it simple. But from what I've tested and seen, even just taking a 10 pip stop on, let's say, a dollar related pair, the difference of that alone, without even going to the 5-minute, is phenomenal, let alone when you understand where to use it. So learn the language of price action, take your time with it, and understand the synchronicities of the charts. You want to be able to sync your time frames all the way through, and when you can sync each thing and understand, right, we're going to go to daily structure, we're going to look for 4-hour entry, 4-hour structure, 1-hour entry, 1-hour structure, 15-minute, then refine on the 5. So the refinement is really about you understanding the most simple things at the highest level. When you do that, you'll start to take advantage of these runs, and you'll just be running suddenly, right, it's been 4 hours, I'm up 7%. That will be a normal occurrence for you. So mathematically, those of you that are doing the break-even dance will suddenly be in profit. Those of you that are in the minus, sometimes a little bit of profit, mathematically, by being involved in these trades, because I'm guessing you understand this, you get this. This is not foreign information to you. 1, 2, 3 touch structure. It's got a lot of depth. You've got a clear middle section on the 4-hour. We get a push up. We get our first push down. We're looking for continuation. It's as simple as that. So you know this. It's just applying it in the right areas. What I don't want you doing is taking 5-minute flags, just like you wouldn't take a 15-minute flag all the way down here. It's the same concept all the way through. So until we get into the more advanced stuff of the advanced stuff, I just want you to focus on the 5-minute additional entries high up in the run, or at the bottom of the chart if you're looking for the buys, so vice versa. And then I want you to refine those 15-minute flags. That's it. So stay away from these, larger 1-hour and 4-hour structures, because you're just asking for trouble. You can layer that on once you understand this part. This alone can give you phenomenal returns. So let's focus on this firstly. So I wanted to go top to bottom all the way through, so you can understand mastering the basics, becoming unconsciously competent at the simple things is what is going to make you the most profit for now and in the long run. I'm excited to get into lesson 2, as we're going to be breaking down multiple 15-minute flags, so you can see how precisely we can refine them and the percentage difference that you can see.